Hi, Matt McAleer, President, Director of Private Wealth, Cumberland Advisors. John Mousseau, CIO, Cumberland Advisors, and Vice Chairman. We're going to go over a few things today. The Moose is going to open up with bonds. You know, we know that bonds have an awful lot of impact on multiple asset classes. So we'll get John's thoughts. We'll rotate back to equities and share a few thoughts.
Yeah, thanks, Matt. This week, bond yields down about a nickel on the longer end, up a couple ticks on the shorter end. Interesting. 10-year bond dipped under 450, 449. That's down a nickel for the week. It was down another 10 basis points prior to today. What did we have today? We had the jobs number for January. That was a surprise. On the downside, you basically printed 143. They're expecting 175 on jobs. However, the revision to December took that up from 256 to 307. So that tended to carry the day, and people said, oh boy, a little stronger. We have gone back and forth on this tug of war for a while. On munis, 10-year muni yield dipped under a 290 to a 289. That was down about 7 or 8 ticks this week. Again, those were probably, a little bit even lower yesterday. I think the story here is the same thing we've been talking about. The fear of Trump, where you had that 10-year bond yield at almost a 480 about a week before the inauguration, is now down about 30 points. It's been a grind. It'll continue to be a grind. The markets are now basically not focusing on any Fed rate cuts for next year, or maybe one, which means if you did get a surprise to the downside economically, it'd probably have a good effect on bonds when people's expectations have changed. The other part of this, and we've talked about this, is that, in Congress, you're going to need some horse trading to get any kind of legislation done because of the thin margins in both houses. And on tariffs, which we know start of the week, and you can talk about it, and started off the craziness last Monday. In the end, it takes a long time to get things in place. You can say we're starting immediately, but then the horse trading starts.
Right. And you mentioned tariffs, and I'll follow up on that. That's a headline. And headlines, for as long as I've been trading, get focused on by the media. What we try to focus on is how the market reacts and trades to those headlines, not the headlines themselves. So what did we have this week? Well, kind of a flattish week in the indices. You had some moonshots in AI, which has been the story now for quite some time, although more leaking and dripping in the broad semi area. Software showed a bid for part of the week. We didn't do anything on the buy side. Remember, we have raised a little bit of cash, and we are looking for spots domestically for that. Just want some reasonable entry. We'll get that. On the international side, we were active this week. As we've discussed over the last 5 or 6 weeks, international kind of quietly caught a bid around Thanksgiving through the holidays, and in January, the broad international markets, index-wise anyway, significantly outperformed the S&P. We took advantage to sell into that a little bit yesterday, Moose, in our international portfolio. 2 of our relative strength laggards. Remember, we talked about this a month ago with energy. Now we're having the same game plan. We were lugging a couple of positions that, relative to other international holdings, just weren't showing enough punch. So market lifts them, and that's France and Switzerland, and we punted. We'll take the price the market gave us with the thought that the market did the work on those 2 securities, not the securities themselves. And that's some of the mentality with relative strength. So clients, in terms of your overall portfolios, you're going to see a little bit of a cash swell between our sales of energy back in 3rd week of January and 2 holdings within the international portfolio.
And short rates are still a place to have money put to work for a while you're waiting around.
Yeah, and it's not a waiting around stamp we have. It's just looking for opportunity.
Right.
And we'll get that like we always do. One thing you always get in the markets from the beginning of time is opportunity. You have to be aware of where those opportunities are and ready to pull the trigger. So very comfortable with where we're situated. Have a feeling over the next couple of weeks with this small rise in volatility, and it's only small,
Right.
but with this small rise in volatility, maybe we get some intraday shots at some areas we want to bolster.
Yeah, and on the bond side, you're going to have CPI and PPI next week, and that's always, a focus point of the bond market, and chance for moving things around a little bit.
Yeah, and way back, it's almost 2 years ago now, when we did a survey of what people liked and didn't like or wanted to see improved on the videos. Our viewers wanted more information on trades we were doing. So that's what we've been trying to deliver the last 6 months versus talking broadly. So we'll try to combine both of those,
Right.
but each week I'm going to be very transparent in where we're allocating capital on the buy side and where we're taking things off on the sell side. One quick note, we're in our new building, moved in last weekend. It was a heck of a week getting everything aligned. We're purring, the engine is running. If you look over my shoulder, you can just about see our old building. So we're just across town. We're a little further away from the water. We got a little tired of the hurricane water coming in and disrupting business. So we're in a great spot. If you're in Sarasota or visiting Sarasota or the surrounding areas, make sure to give us a ring and come in for a cup of coffee or lunch. We'd love to see you. Have a great weekend. Speak to you soon.